Hey guys, and welcome to the Strategy Lab video. My name is Alexander Nikitin, and in today's video I will continue my market research on unified Gartleys and ciphers. The pair that I'm going to do today is the dollar-yen. Time frame is 1 hour, and unlike euro-dollar, this pair is slightly different. That's why we will have a slightly different execution methodology here. Well, let me then go to my Excel spreadsheet and let me create a sheet for that dollar yen. I will rename it JPY. So what I will do, I will simply copy this, all that stuff, and I will paste it here to dollar yen. I will delete the results, of course. I will delete this result. I will change the spread because it is 0.9. Then what I will do next, I will cut this picture, paste it here. Okay, so what is next? I will change the data, select data. Instead of euro USD, it should be USDJPY. Okay, come on. Yes, it is now 0. I will make it slightly less. And then I'll go here. I will stretch it lower and lower as more data appears on the chart, but for now it will be this way. Okay, what is next? Then let's modify our execution. The execution on euro-dollar was a trend bar, and I also found that a two consecutive bars is also a good execution for this trend bar, consecutive bars. Let me make it this way. I'll delete it from here. Consecutive bars. It means that a reversal starts when I have two bars of opposite direction. For example, if I'm looking for a bearish reversal, I need to have two bearish candles. So it is also good for euro-dollar, either a trend bar or two consecutive bars, or both. But on dollar-yen, it's not that simple, because dollar-yen provides slightly different reversal types, and these reversals more likely like double tops, and double bottoms. So the execution should be adjusted to this, let's say, pair's personality. Of course, you only can know this if you do thousands of those backtesting processes, if you scrutinize, if you examine thousands of reversal types, and of course you know what is the pair's most likely reversal type. Yes, I don't say that it always reverses as a double top, double bottom, but sometimes it has a sharp reversals, but in majority of cases we have a double top, double bottom. Okay, so here's the chart. The settings are the same, the Prax algorithm and the cipher and custom Gartley. If we go to settings of my, not this trend bar, I don't need trend bar anymore, by the way. Okay, let's go to this. So here are the settings for B, for C, For custom Gartley, this is invalidation level is 1 and invalidation level for cipher is 1 as well. It is the same as from yesterday's video, and the filter should be 0. No need to use the multiply 0.3 as usual, it should be 0. What else? Well, the rest is the same. Enable this zigzag to see if the movement is straight or not. Now let's go disable all default patterns and enable our own. Okay, so what do we have here is this. This is the pattern. As usual, stretch this 50%. For a reversal to start, I need to wait for 2 green candles to appear, and here I have 2, 1 and 2. You can see that. This means that a reversal happened. After that, we hit 50%. Basically, it is a target level for the pattern, for the unified Gartley. It is the target level, but it doesn't matter in case of this double top entries. So what is the double top entry? What I am to do, I am to wait for price to go here. By the way, it can hit 50, it can hit 618 here, yes, but it cannot exceed this C point. So the movement should not be that large. 50 is okay. Okay, so what we need to do, we need to wait for price to exceed this low. What means the exceed? It means that it should penetrate it by at least 1 pip, and 1 pip in a quote is this second decimal. It is not the third decimal but the second decimal. And then after that penetration, yes, if we do not violate the pattern, if we do not cross this red line, price should exhibit the bullish close, bull candle above the penetration level, this way. You see, this was the level, initial reversal, then it exceeds, and then it breaks through that reversal level back. So this is an indication of further price movement. What we need to do, we need to stretch fibs to the price section, then we add additional 14.4 distance. Okay, let me type it this way, 514 and 40. Okay, this is the rectangle that symbolizes 1 ATR period 5000, and I place it below this low. Another way to do that, I just forgot about that. The NPS is very powerful, guys. It can do this automatically. You simply need to place your cursor here, then just hit Z on your keyboard and then left click, and you will see the ATR net. 1 ATR above this level, yes, 1, 2, 3 ATR, and 1, 2, 3 ATR below this level. So you see this, drawing these rectangles is not needed because you have this stuff. Okay, bullish close above the level is the entry. Measure the stop loss 54.8, measure take profit 46.9, 54.8, 46.9, 54.8, and here is 46.9. Let me do it this way. It should turn them negative. So I just don't. Sometimes I forget to turn them negative. When I type it here, it should be turned into negative, or I should type it minus 54.8 and so on. So let Excel take care of this stuff, and it will turn it into negative. It was a winner and done. You see the chart is updated, the stuff is updated, how many trades, how many winners, and we just continue. The next pattern is the cipher, and after the completion of the pattern we have this breaking back, not breaking back, sorry, but initial reaction, and for a reversal to start we should have two red candles, two consecutive red candles, and we only had the spike to the downside, and then we have a movement to the upside. We don't have two consecutive red candles. Then price goes higher. Here we have one red candle, then we have green, green, then we have one red candle. Okay, then price goes higher. Here we have 1 and 2. Then price tries to exceed the level, and it fails. So we didn't exceed, we do not enter at this cipher. Okay, next opportunity. The next opportunity is this. This is a Gartley, unified Gartley pattern. So what do we have in this opportunity? We have a reversal started, yes, it goes, we have 1, 2 consecutive candles, then we penetrate our level, and then we have the first bullish close above that level, breaking back. Okay, so we just measure the distance from this close to our 180 below, 79.1, and we go here 84.9, 79.1, 84.9. Okay, and this way we had a take profit this time. %50 is hit, and even more. And we continue next. Going next. You see the difference in reversals, yes? So we have kind of double tops, second test, reactions, and other stuff. Okay, what do we have here? We should have first 2 consecutive candles to signal the reversal, so we don't have them here. And then if we go lower, we don't have them here. If we go lower, we exceed the pattern and nothing should be taken here. Then this cipher pattern, the CD leg broken, so the rule stays the same for the identification. This Gartley, unified Gartley, we have that sharp reversal. Pretty rare situation, but it happens. So we miss this winner. Then let's go next. This larger Gartley. Let us stretch the fibs. We need 2 consecutive green candles for a reversal to start. Well, the 2 consecutive candles appear only here. Only here, yes. So after that we penetrate, we break it back and so on, but we already exceeded our limit. We should not enter. Cipher is invalid because of C to D rule. Then this Gartley. Look at this price action. So we have a reversal started, but we failed to penetrate that, and that's why we do not enter. We missed this opportunity. We need to penetrate and then turn back. This was not a double bottom, double top entry. Gartley is invalid. This one is invalid, invalid. Okay, this one, let me check it. Didn't complete at the first test. Didn't complete on this. We did complete on the second test. It was a sharp reversal. This time we didn't enter. Okay, what is the next opportunity? The next opportunity is this. It didn't complete. Oh, yes, it did complete here, and here the reversal started, you see. Then we penetrate our level, and the next day, next time we penetrate it back is all the way here. Of course, we invalidate the pattern after that. So we just don't enter a cipher pattern. Let us see what happens here. What is the price action? I will zoom it in. This is one green candle, two red candles, two green candles, so reversal started. Then we have bearish candle, bearish candle, bearish candle, and after then only after that we go and break the level back, but we already exceeded the limit. That's why we stay away from this pattern. Another trading setup is this. Okay, what we have? Let me zoom it in. We have one red candle. If we go deeper, we have one red candle. Let me zoom it out. One red candle, then we go deeper, we have one red candle, the reversal started, yes, then we break it through and exceed the limit, and by the time we have that break it back, we already have invalid pattern. The next pattern is this. It looks this way. So let me zoom it in. Two red candles are here, 1 and 2. So we go and hit that here. Then we should penetrate. Is this a penetration? Let us see. The high of this candle says 105, 900, and the high of this candle says 105, 910. Yes, it is 1 pip away and then it closes below. 1 pip away and then it closes below. This means that we should enter at this candle. Drawing the ATR net. Further price action does not hit the stop loss. Of course, when price goes higher, we should restretch our fibs to have a 50% level. And we enter at this candle, which is 19.8 pips risk, 72.6 reward. 19.8 risk, 76 reward, and this was a winner. Let us go next. Okay, cipher pattern here. We should find 2 consecutive red candles, but we don't have any, yes, until we violate that. We didn't have any red candles before the violation of the pattern. That's why we stay away from this. Then let's go here. Let me zoom it in. A godly pattern. 49.4, 49.0. So it was completed here, and we have some consecutive green candles. Then we exceed the limit, and then we break it back to the upside. So it means that we should enter this, and let's calculate what was the result. Enter this candle, close. It was 30.5 versus 67.5. 30.5, 67.5. Oh no. It is a stop loss. Okay, let me sip my coffee. Now continue. We do not re-enter these patterns, especially on dollar yen. on euro dollar we can re-enter because euro dollar provides sharp reversals, and when we have that kind of second test it is okay. On euro yen we already have a second test, and when we try to re-enter it means that we should wait for a third test or fourth test, and third test means the consolidation. Okay, bull candles, and when we have a consolidation, price is likely to break to the side it was previously, to the direction it was moving previously. Okay, 2 consecutive candles as this, and then we didn't penetrate our level, so we just wait. Same stuff here, sharp reversal. We have this bullish candle, reversal is okay, and we didn't retest the level. A cipher pattern is this. Two consecutive red candles means that we have a reversal, then we have a retest maybe, but obviously we do not penetrate that by at least 1 pip. This means that we go higher and we break this level and then we break it back. That's why this is the entry candle, and we should enter here with stop loss 29.4 and take profit of 36.7. It was a stop loss as well. 29.4, 36.7. Let's go next. This was invalidated. This cipher is a good trading opportunity. Two bearish candles, we have a reversal, then we exceeded the level and then we closed back. Let's have a ATR. We should enter here and this close. Stop loss is 33.6. Take profit is 14.4. And this time it was a take profit. Okay, 66% probability, 1.94 reward to risk ratio. Pretty good reward to risk, but too early to say it now. It will become awful in the end, I suppose. Okay, the next pattern is this cipher. We complete the pattern here. We have one red candle, yes. Then we go higher. We have 2 red candles, yes. So this symbolizes a reversal. Then we break it through to the upside and break it back. So our entry is this candle. We should place our stop loss here, and let me zoom it in. We enter this candle 40.8 versus 58.4. 40.8, 58.4. This time it was a stop, and yes, we'll go next. Invalidated, broken C to D leg. Invalidated, the C to D broken. Invalidated, same stuff. Okay, let's look at this pattern. We completed here, and then we went lower, lower and lower and exceeded that limit. Let's look at this pattern. We completed here, then we went higher and higher and higher. We had a reversal. Okay, we had a reversal started, Then after that we'll break that to the upside, and let me look at this candle. The high of this candle says 120.62.0, and 120.62.0 is invalidation level, so the pattern was invalidated before we broke it, before we had a signal to sell. Okay, invalidated, broken C to D, smaller pattern. Smaller pattern is that consolidation. You see, when we have 1, 2, 3 touches, when double tops turns into triple top, a quadruple top, or whatever, it most likely is not a reversal anymore. Okay, first reversal, then we had that breakthrough, and then we had that close above, breaking back. 24.1, 23.7, 23.7, and 29.7. 29.7. It was a stop loss this time. Let us continue. So what was this? We had a reversal from here, but the pattern was not completed yet. Then we didn't have a reversal, and then it was invalidated. Let me examine this pattern. Okay, the reversal from here, 0, 0, 0. We didn't have two candles, and then we had red, 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 red to the downside. Okay, invalid C to delay. Smaller Gartley on the top. The initial reversal, the pattern was not completed. Okay, then the second reversal is okay. Then we exceeded that and we broke it to the upside, and basically we should enter. So we had 26.7, 26.7 to 51.1, 26.7 to 51.1. And again it was a stop loss. Let's continue. So Gartley no valid. Okay, one more. Two red candles, then we go exceed this, and then we go 1, 2, 3, and this candle. Let us see if it penetrates the level. Closes below. The close says 1877, 1877. It closed at this level. Okay, then we have another attempt, and then it goes, and obviously it closes here. Obviously it goes finally and gives the signal at this level. So we should place our stop loss 1 ATR here. Then we should measure the stop loss 82.1 and take profit 41. 82.1, and here we have 41. This time it was a take profit. Going next, cipher, nothing here. Broken CTD leg. It gapped higher. It gapped through. Nothing here. This pattern. Let us examine it. One green candle doesn't tell us about the reversal. After that it was invalidated. Not yet. Not exactly. Just before the invalidation we had 1, 2, 3 candles, green candles. Then we broke through and invalidated. Well, yes, it was invalidated. Another pattern is this. A Gartley pattern. Gartley, unified Gartley formation. We have green candle, then we have 1, 2, 3 candles, so we have a reversal started, yes? After that we penetrated this to the downside, and first bullish close is this candle. So we have a signal to buy. We had a signal to buy. We place our stop loss 1 ATR below the extreme. Okay, a signal appeared on this green candle. Stop loss is 40.2, take profit 40.6. Okay, come on. 40.2, 40.6. This time it was a take profit. Okay, and the drawdown recovers. You see, minus 32. It starts to recover. 11 trades only. It doesn't mean much, but okay, we're already done 10% of the work. Invalidated C to D leg, cipher invalidated C to D, unified Gartley invalidated C to D, didn't complete. This one. Okay, let us see how it goes. We had a reversal here, 2 green candles, then we broke it through, and by the time we broke it back we already exceeded that invalidation level. Okay, cipher doesn't look like we have any reversal at all, we're only green candles. See how many patterns are filtered because we don't have a valid reversal. Okay, let us see, we have a reversal and then we have a test, but we do not penetrate that previous top, so didn't enter this. Nothing here. This Gartley, obviously we have 2 red candles, you see, violated the zone. This one is a sharp reversal, so if you see this, it is a sharp reversal. It's okay to be traded with limit orders, but you never know if you will have a sharp reversal, or you will have a penetration, second test or whatever, or you will have a stop loss. You never know it in advance. That's why you should use the technique that is most probable for this pair. Okay, the reversal was sharp and we never had a second test. Cipher. Cipher is this. We had a first test here, you see that first test, but we didn't complete the first test, and of course our second test is considered a sharp reversal. Another cipher. 2 candles signal a reversal, then next candle penetrates and then closing back, but before that it invalidated the level, invalidated the pattern. Okay, then what we have? have nothing here. This was a sharp reversal. We will skip this Gartley. It was okay, but we need to skip it. We didn't have a double top, double bottom. Another Gartley is this. Let us see. Yes. So it completed here. Then we had a number of green candles, the reversal started, then we broke back, broke lower, had a double bottom or whatever, then we broke back and we exceeded that. If only we didn't exceed, then the close above this level will signal an entry. But we did invalidate it, the pattern. Okay, invalid CTD, invalid CTD, the Gartley, this Gartley pattern. Let us see. Okay, we invalidated this level right before the reversal started. It happens. Broken CTD leg. Well, this unified Gartley. Another opportunity. So we have a reversal, then we spike it through and close it back, and it makes no sense to enter because we already hit the 50% target. If only it closed somewhere higher, yes, then it would make sense, but at this situation it makes sense to enter, makes no sense to enter. Okay, so I will skip this situation, and the next one is this. We had a reversal, then we had a test, and then we had a close above. So this small candle, green candle, is our entry. We need to exceed the range. We need to place our stop losses. We're risking 23.8 to generate 89.6. 23.8, 89.6, 23.8, 89.6, and it was a stop loss this time. You see, it broke back lower. So we continue next. A cipher pattern. This one. We have initial reaction, yes, then we have a test, close below, and then we have second reaction. On dollar yen we exploit second reactions. So we just enter here, 29.9, 29.9 versus 54.2. 29.9, 54.2, 29.9, 54.2. The drawdown almost recovered, 7 pips left. All this trading stuff is about recovering drawdowns, because most of the time you will sit in a drawdown. After you make a new equity curve high, you then almost immediately start a drawdown, then you make another equity curve high, and then you recover it back. As long as you can recover the drawdowns, nothing can break you. Sharp reversal here, no opportunity. Broken C to D. Okay, what is this? Didn't complete. This one had no signals. We had only one green candle. If we had two candles and then broke back and then once again back, then it would mean something, but for now it is nothing. Nothing here, nothing here. This one is interesting situation. Let me see this. Two candles signal the reversal. Then we break it higher to the upside, yes. We broke this level by this candle and invalidate that. Very simple. Maybe this technique is a bit weird to you. Maybe it is a bit strange and you never heard about this. But well, it all happens for the first time. Sometimes we always have something that happens for the first time. Okay, two candles signal the reversal, then we have a spike to the upside, you see, above this level, and then we close below. So what we need to do, we need to stretch our 3-month notches. Okay, 105.570, 105.570, we invalidated that. I just wanted to enter here to have this entry, but we invalidated. If only we were half of pip away, it could be, well, it could be okay, but now it was not. Potential loss here, you see, 1, 2, 3, 4, 5 tests. The more tests you have, the more likely you'll have a continuation. So if you didn't reverse at the second test, the third test, you should not enter. Don't re-enter for the third time. It is okay to re-enter for the second, but it's not okay to re-enter for the third time, because most likely you have some kind of what is that, triangle or whatever formation. Red candle, penetration, close back. We should enter this. Having this number, this is the entry candle, this is the stop loss, 27.5, and take profit 35.6. 27.5, 35.6. Okay, 27.5, 35.6. It was a stop loss. Sorry. Oh, we were so close to recovery, but we didn't do it. Guys, I also want to test the 382 target of the C2D. 382 of C2D. Right now I'm using the 50% C2D, but I also want to test the 382, at least to do the break even at 382, because I noticed it is very, very often price goes to 382 and then bounces to the upside. They say that 382 is the most common retracement, but the most typical one. By the way, what is the difference between the most common and the most typical one? I heard they say that is the most common 382 and the most typical is 50. For me it is kind of conflicting. What is that? Obviously we more often hit 382. It is an obvious thing. Maybe the 382 is a bit hit more often, but it doesn't mean that the retracement stops at 382. The next thing is this Gartley. Okay, what we have? Reversal started right now, yes. Break it back and continuation to the downside. In harmonic patterns, by the way, in harmonic patterns, yes, we trade it as continuation if it is broken to the downside. If after the initial reversal you break it lower, after the terminal price buy, yes, you break it lower and lower and lower, you can trade it in that direction. Why not? Okay guys, I will pause the video and